With Devesh Kumar, country head with CIMB India. Devesh, good morning. Thank you for joining us. Devesh, I guess the bad news is obvious. It's rupee, it is Syria, and what Fed could do. But my question is not why Indian markets are falling. My question is how much more Indian markets could fall, and is all the bad news in the price?
No, if you look at the index level, then if you take out a couple of sectors, then Indian markets are at very low levels, and the number for Sensex, for example, varies between whether it is at 10,000 or 12,000 levels if you take out consumers, technology, and a couple of such sectors. So what I feel and what we believe in is that looking at index level is not going to help, but there will be reallocation of, I think, portfolios, and so that is what is going to happen. Bad news is not fully out yet. We feel that if you look at financial sector, there some more bad news is expected, and probably for next 1 to 2 quarters, we could see some damage there, and we have seen that wherever people had a lot of confidence, there also they have started cracking. So I think next 2 quarters we'll see a couple of surprises in terms of the ones where people have a lot of confidence getting slightly weaker. And in that context, I feel that export-oriented pharma or forex revenue-driven pharma companies, they are going to benefit over next 1 to 2 quarters, mainly because of currency and the volume impact which they will have. Whereas there will be a lot of reallocation, and next 6 months is going to remain volatile. Having said that, like if you look at daily trends, then probably in recent times we have seen a lot of damage, and probably things should stabilize in the near term, but I would not like to speculate on that. I feel that next 6 months until elections, we could see some more damage to stock prices, and till clear direction emerges that now nation building, that is main priority, I think we'll see more volatile market.
Devesh, if exporters are a clear long trade, how come mid-cap IT stocks have not participated, or they have not seen serious uptick, serious strong price action in last 8-10 days, because it's only the large cap IT space which is charging up?
Yeah, when there is a general crisis of confidence in management and all, I think it happens with a lag, and at this point of time, what is happening is people are consolidating their portfolios rather than trying to introduce new stocks and all. But if current situation continues, then probably I think once people start buying again, mid-cap IT stocks may benefit from this. But clearly the difference is going to widen, and larger companies, well-managed companies with established business model, they will continue to dominate.
Devesh, what's the sense about oil and gas? Because that really has been getting beaten down off late. Crude spike up, rupee weakness, nothing seems to be working in favor of them.
No, certainly. I think as far as oil companies are concerned, I think the worst will be over for them once the international crude, on that front there is some clarity, but I think in the near term, if the panic spreads further, that will be a good buying opportunity into these stocks, because we don't think that the expectation of long-term crude prices at 150 or whatever levels, it has to come to the long-term levels, and that will help these companies. But yes, currency has gone against them, and that should be factored into any long-term revenue models.
Let's talk about private banks. Now, private banks in the past they've managed to grow when the circumstances have been difficult. They don't have a huge NPA problem, their NIMs are okay, and they've managed to gain market share. If the big picture argument for private banks is still supportive, what explains the recent price damage in Axis Bank, ICICI Bank, Yes Bank, IndusInd Bank? These are good quality franchises. I mean, they're falling as if there is no tomorrow.
Certainly, I think the main concern people have is whether going forward in next 2 quarters, the asset quality on that, will there be surprises? And in case, see, this quarter itself, if there are no surprises, quarter ended September, then we'll find a serious bounce in these stocks. And but at this point of time, people are worried. They're not in a mood to take any big risk, and that's where I think this damage is taking place.
But Devesh, when we saw similar circumstances 2 years ago, these banks had managed to grow, and their asset quality or the book quality was pretty much okay. So what is the scare all about right now?
See, if you look at last 12 months, there have been many cases where companies they have shown or they have gone bad. For example, if you look at Kingfisher, Deccan, and such cases, which was not happening earlier. And there is a fear that a lot of assets of Indian banks in infra and related activities, they are not able to generate incomes, and therefore there could be surprises as far as asset size is concerned. So in the past they would have grown well, but I think at this point of time, quality of asset, that is what is main concern. And I think one will wait for 1 to 2 quarters before coming into these private or PSU banks.
Maybe we should continue to like Bharti. In fact, you guys have an outperform rating on this one. What's the rationale behind it?
Now, in the telecom space, over the last couple of years, we found that on the policy front and operating environment, there were a lot of uncertainties. And those uncertainties have got cleared. And now I think in this space, operating environment has improved. So that's where we are looking at on this space with a bit more of confidence and yeah.
Stocks like JP Associates, DLF, GMR, are they pricing in all the bad news? It's out in the public, the kind of debt burden or JP Associates or DLF is sitting on.
Certainly. So here, since I don't talk on specific stocks, but the bunch that you have talked of, on that, the way to look is a lot of bad news is already priced in, but that cannot be talked about all the companies, and therefore wherever you find that they have built assets, and at this point of time there is problem on income side, or wherever there are assets and there because of couple of issues they are not generating income. Once those issues are resolved, then these stocks will again find favor. But having said that, there are many stocks in the same space where a lot of debt is there without a commensurate asset on the balance sheet. They will be under severe pressure, and that's what is causing worries about Indian banking system as well. Debt without commensurate asset creation. Therefore, one will have to differentiate among this bunch of companies, and wherever like income generation can start with some debottlenecking, like if the power plant is ready and coal is going to be available now, then I think these are the stocks which will bounce soon, whereas a lot of others will find difficult to survive in the current environment, and that's what investors are waiting for, to see what happens to this entire space over next 2 quarters.
Devesh, what about metals? Will that trade hold out?
Yeah, so there I think they are looking better than what they were looking, say, probably a year back, and yeah, they are better of the lot.
Let's look at HDFC Twins now. And they really have been the linchpin of Indian markets. They always fall the last, but in last 5 days, HDFC Limited, which is India's biggest mortgage company, has taken a knock of about 12%. Large part of the compression for HDFC has come in last 2 days. Devesh, these are called as the last bastions and they are falling now. Is that indication of complete capitulation, or that is an indication that, look, the long-term equity stakeholders are now panicking and the trade regime from a global perspective has reversed, and now foreigners also are in a mood to throw family silver out?
No, at this point of time, I think panic that has increased, and if somebody wants to book profits, these are the stocks where you can book profit. That is one. And second part could be that whether with interest rate rising on mortgage side there could be some problem or not. But I think mainly people have made money in these stocks, and now probably if they have to take out some money, the other stocks where they will exit.
Okay, Devesh,
yeah,
let you go on that note.
This clearly indicates that at this point of time, at this point of time there is a lot of panic and uncertainty about investment in India, and that's what is reflected in all these trades.